Welcome to the Allan Small Financial Show. As always, I want to thank all of you for taking the time out of your busy day to spend it with us. We have a real special show for you this afternoon. With all the talk about tariffs and what that's going to do or potentially do to our economy, to jobs, to investors' portfolios, perhaps, a lot of questions out there. And who better than to answer some of those questions than the Premier himself? As some of you already know, I had the opportunity to catch up with Premier Ford last week. Got to talk to him about what's going on. Some things have been announced, some things haven't been announced as yet since we had our interview. But we're going to have the Premier talk to us. We're going to air our interview in just a few moments regarding tariffs, regarding Ontario. How is our province doing? Are we still growing? Are we still attracting business to our province? How are things going? And as I said, who better to answer those questions than the Premier himself? And we're also going to go into answering all the questions, or as many questions, I should say, as we can that I've been receiving over the last few weeks. A lot has changed since our last show, and having a show today hopefully will help provide some information and knowledge to many of you watching, many of you investors that are watching. And as I said, promises to be a great show. So let's put up our topics for this week's show. And there they are. Premier Ford talks about U.S. tariffs and the Ontario economy. As I said, a great interview, about 14 minutes or so long. I asked him pretty much all the different questions. And, the Premier is obviously generous with his time. And as always, he answers every question I ask of him. There is no beating around the bush or kind of, not answering or getting around any questions. He's a straight shooter, and that's what we like about him most. People person, and that really comes across in our interview. Second topic, Canadians get an update on inflation. We had some inflation numbers come out this week. Inflation numbers look pretty good, except for one reason why. One reason why the inflation numbers actually went down, and we'll talk a bit about why they went down and what the Bank of Canada may be thinking. As always, our top three things to consider over the next 5 to 10 business days. Three ideas that I think everyone should have on their minds before you make your investment decisions. U.S. bank earnings kicked off quarterly earnings season recently. Bank earnings were phenomenal, fantastic, blowout numbers from all the major U.S. banks. And we'll get into those and to why they had such great numbers. Quick Hits, a segment of our show where we talk about three things that we have seen in the news recently, and I'm sure many of you have seen them as well. I'll chat about them very briefly. And finally, we'll take your questions. Any questions that you have during the course of our show, please feel free to put it in the chat boxes, and we'll either get to them at the end of the show or answer them before our next show or during our next show, which is in 2 weeks from now. So without further ado, let's move on with an interview with the Premier. As I said, caught up to Premier Ford last week. We're going to talk tariffs. We're going to talk the state of the economy in the province. So let's move on to the interview. I'd like to welcome Ontario Premier Doug Ford to our show. Premier Ford has led the province for more than 6 years, championing himself as a builder. He's building a stronger economy and is attracting new investment to the province, including the areas of electric vehicles and batteries. Prior to being in provincial politics, Premier Ford was a Toronto City Councillor. He's also a successful businessman and owner of Deco Labels. Premier Ford, welcome back to the show.
Well, thanks so much for having me, Allan.
Thank you so much. I know, we haven't spoken in a little while, but I feel like I've seen you in many places recently, and I must say you're doing a great job representing the people of Ontario and Canada. So keep up the good work. We appreciate it.
Oh, thank you. It's a good team Canada effort, and everyone's pitching in, yourself included. So thank you.
Well, thank you. Thank you. I thought we'd start off with kind of a general question. Canadian investors and many businesses have told me recently that they're extremely concerned, obviously, with the threat of American tariffs on Canada. And obviously, you've been front and center, as we've said, doing media appearances here in Toronto, as well as down in the US. I saw you on Fox, CNN, etc. Uh, I guess my first question is, what's your take on what's happening now? Do you anticipate that the day after the inauguration, that tariffs will be announced on Canada?
Well, I can't really get into President-elect's mind. I'm pretty sure that it's going to happen either on the 20th, 21st, or shortly thereafter. He said he was going to do it. I've been saying for a couple months now he's going to do it, and he'll put tariffs on Canada. Hopefully not at a rate of 25%, but that's what he's touting all the time. So we're prepared. We have to be ready. I understand that businesses have concerns, but we're going to be there to support our businesses in Ontario. And I know the other premiers, they feel the same way, that we have to stand united. We have to make sure that we don't show our cards.
Right. No, it makes sense for sure. And, we heard, or I've heard you say recently that it may take spending billions of dollars to keep Ontarians from losing their jobs. Again, I get a lot of our questions today from concerned individuals, but one of them was asking me, how quickly do you think that the tariffs will affect our economy? And is there anything Ontarians and Canadians can do to limit the effects of these tariffs?
Well, Alan, I believe the tariffs come on, they affect the economy immediately. Matter of fact, they're hurting our economy right now to a certain degree that people are concerned about investment. Are they going to face tariffs? But we've created the environment for companies to come here and thrive and prosper and grow. We're going to continue doing that. And we're going to be there. And let's see what sectors he's going to target. I know one thing, he's going to target Ontario. We have a bullseye on our back because we're a manufacturing powerhouse in North America. We're a third largest trading partner in the world to the US. Ontario alone is. So he's going to look at different sectors, but it's not going to just hurt Canadians. It's going to hurt Americans. I've talked to endless elected officials down in the US as early as like an hour ago. I was talking to the great governor from Kentucky. Yeah, he's concerned. Everyone is concerned right now because it's going to affect both sides of the border.
Yeah, and being a businessman as you are, you know how negotiations work, right? They usually go well for the business or the person that is negotiating from a position of strength.
That's
And I
right.
think that's what worries many is that when you look at the United States, the largest economy in the world, many believe that the US has the strength in this case. So people have been asking me, how do I think? And I guess I'll ask you, how can we negotiate with the US when they are the most powerful nation in the world today?
Well, similar to what we negotiated last time, I'm a strong believer. You negotiate through strength, not weakness. You don't show them your cards. I'll give you a couple areas that we have strength over the U.S. One is the aluminum from Quebec. They cannot produce the volume that they're used to producing without the aluminum from Quebec. We have the highest grade nickel in the world. That 47% gets shipped down to the US, not only for their military, but for their manufacturing. They'd be devastated if we cut them off on the nickel there. We have potash, that 87% of potash gets shipped down to the ag sector, the agricultural sector in the US. They'd be devastated without potash. We have uranium from Saskatchewan that we refine here in Port Hope, Ontario for their nuclear capabilities. It'd be devastating. Not to mention our energy, the electricity that we ship down to Michigan and New York and Minnesota, 1.5 million homes. We keep their lights on, and obviously the crude oil. We give them crude oil at a discounted cost compared to other areas to keep their gas prices low. And these are some heavy tools that we have that the U.S. economy would be staggered if we ever put tariffs or we put an export tax on.
Yeah, it sounds like, the politicians that you're speaking with down south, they understand this. I guess
Yes.
you wonder, President-elect, if he understands the magnitude of what could happen if he goes through with these tariffs.
That's why I've been communicating. I truly believe that he's not informed from his from his people. I don't think he realizes the devastating effect it would have on not only on Americans but Canadians as well. 9 million Americans wake up to produce products and widgets for Ontario alone, and that would be devastating for 9 million Americans if that happens. So there's quite a large sector. When I was speaking to the governor of Kentucky, he felt the pain on the bourbon sector in his state when we put tariffs on bourbon. So there's a wide range of tools that I don't want to use, but we will use to stand up and protect Ontario and Canadian jobs.
Yeah, and you make a great point, and I often wonder, what's the end game here, right? Like, what is he trying to accomplish? I don't think we have a problem with our border. I know I saw your reel recently about how we're beefing up the border, and I think that compared to Mexico is not much of a problem at all. And you know, I, I don't think that the president-elect wants Canada to be the 51st state. I know he's mentioned that, and I thought he was joking the first time he said it. So I struggle to find out what's the end game here. What is he trying to accomplish? Is it the deficit between the two countries? What is it that he's trying to get across? What is his point in all this? And I struggle with that.
Well, I struggle as well, Alan. I'm asking myself the same question. Let's come to the table and sit down. Tell us what you need, what you want, and then we can negotiate from there. So it's concerning on both sides actually, and it's not just going to be us. It's going to be the whole world. He's going to be targeting. I think he thinks he can pay down the deficit or his debt, I should say, and that's just not going to work. He says he has an imbalance on trade with Canada. Well, you take our crude oil out of the factor and it's split right down the center. It's to the opposite. We're subsidizing them on our crude oil at a 20% discount until they can get cheap gas. So it's a trade, open trade, and a good trading partner with a good trade deal benefits both sides of the border. I've talked a lot about AMCAN, Fortress, protecting American and Canadian jobs. We're unstoppable. I want to give them more energy. I want to give them more, nickel and other commodities that we have.
So now let's turn to our country. Obviously, a lot of things going on here. We had our prime minister resign recently. We're going to have a new federal government forming, I guess, possibly within the coming months. When we look ahead, what would you say, or what advice would you give in the new prime minister, whoever they are, with respect to trying to be competitive with the United States? We know that president-elect is going to come in and he's going to try and cut taxes. He's going to try and cut a lot of the red tape. Do you think we need to match that up here? Would you advise the new prime minister to do the same? Look at our tax system, look at cutting red tape, and trying to, I guess, stay as competitive with our neighbors to the south as possible?
Absolutely. When I opened up in Chicago, it was still held under a Canadian company because our corporate tax was lower, believe it or not, than the US at the time. Now things have changed. We need to make sure we're competitive to attract companies from around the world to invest into Canada or Ontario specifically. And that's what we're doing. We've seen massive investments around the world. There was 136 companies worldwide last year that invested $11 billion and created 12,200 jobs. We've seen a total of close to $70 billion invested since we've been in office here and created 850,000 new jobs. I always say, Alan, government doesn't create jobs. We're in trouble if we create jobs, but we create the environment and conditions for companies to come here. And we've reduced the cost of doing business by $8 billion each and every single year. We have the talent pool here. We have everything here. And I just encourage any company to come in and invest in Ontario.
I guess that leads me to my next question. It sounds like Ontario is still, chugging along. We're not slowing down. Do you have a fear that with all this uncertainty, whether it's U.S. tariffs, federal government prorogue, no parliament, how hard is it now to attract new investors, new business to come to our country, to Ontario, with all this uncertainty?
Well, you nailed it, the uncertainty. We need stability in Ottawa. And by the way, from all three parties. Yes, we know the instability of the Liberals, but the other parties need to step it up. They need to come out of hiding and get out there and start voicing their plan and their concerns. So that's what we need to do is make sure that we're united. We have to send a clear message to the rest of the world. We are open for business. I talked to our friend and your friend Vic Fideli the other day. He's in San Francisco at a tech show right now, creating more opportunities for companies to come here. And we have approximately $40 billion on the table from companies this year. We saw the job numbers come out, and just recently, 27,000 new jobs in Ontario, and I think it was 15 or 17,000 of them were manufacturing jobs. So we can compete. We have the talent, we have the people, and we're creating the environment of low taxation because I know what people and companies do. You put money into people's pocket, they're going to go out and spend it and stir the economy up. As simple, this is as simple as going out for dinner, buying your kids sneakers, doing something you might otherwise not be able to do if you have more money in your pocket. And I know as a business owner, you make a profit, we invested it into our people, into technology, into our infrastructure, buying new equipment. That stirs the economy as well. And that's what we need to continue doing.
I guess my last question to you, obviously we've seen unemployment numbers recently in Canada dropped a little bit from 6.8 to 6.7%. I know in province of Ontario, we're about 7.5%. And I guess in terms of attracting business, is there any one area in particular that your government is going after more so than others? Is there one area that you think we can continue to excel in or perhaps move into that we haven't done so in the past?
Well, first of all, I want to address this that really gnaws at me. There's healthy people. We have over 200,000 jobs available in Ontario. We need the healthy people to get their butts off the couch and get in there and start applying for the jobs. We need more productivity, not just here in Ontario. We need more productivity right across Canada. Sectors that we're looking at, obviously, the tech sector is growing at a rapid pace. And along with the EV sector, life science sector, manufacturing as a whole, and as simple as going, maybe you don't have that skill set. Go into an Amazon warehouse. They're hiring nonstop. They're hiring every single day. Get out there and work. Contribute to society. That's all we're asking.
And as you've said, our province has excelled under your leadership, so we're thankful for that. We thank you and your government, and yeah, hopefully we can get some certainty into the minds of small businesses and investors, and we'll get through this. We'll just have to, it may take a little bit, but definitely we'll get through it.
Well, thanks, Alan. I love the positive attitude. I share your sentiments, and we will get through it. We'll all work hard, and we'll come out on top. I always look at any crisis as there's opportunity somewhere within those crises to make us better and work harder and be more creative. But I want to thank you. Keep going. You're doing a great job, and look forward to getting on again with you.
It's great. Thank you, sir. And thank you, Premier, for taking some time out of your busy day. I know it's been a busy time for you. Thank you so much. All the best, and we'll talk soon.
Thanks, Alan. You take care.
A great interview with the Premier of Ontario, Doug Ford. And as I mentioned off the top of the interview, we talked about the inauguration that we were wondering if tariffs would be placed on Canada, Mexico, or on China the day after the inauguration, which was this past Monday. So at the time of the interview, which was last week, we did not know. Since obviously the interview, President Trump, now no longer president-elect, but President Trump has said or has hinted that perhaps tariffs would come as soon as February 1st on Canada. There's been some talk back and forth that may not be 25%, maybe as much as 10%. It may be in certain industries. As you heard the Premier say, he's expecting tariffs, especially on Ontario, because of how much we export to the U.S., one of the largest trading partners of the U.S. in the world, just Ontario alone. I thought that was an interesting fact. But also found, as always, the Premier's candidness, right? He wants people to get off the couch if you're able to and go out and find jobs. There's 200,000 jobs openings in Ontario. And he talked about that with respect to the economy. I love how how candid he is, saying, anybody who's healthy, get up, get off the couch and go find a job and start contributing to society, I think were his words. So I think he's hoping that that can continue. But I think he's prepared. I think he's prepared to for these tariffs. He talked about putting tariffs of our own. I know our federal government, our prime minister has talked about putting tariffs on our own on U.S. goods coming into Canada. He doesn't want to do this, the premier said, but to stop the shipments of things such as uranium and aluminum and nickel, high grade nickel that he said that we have that the U.S. needs for many things. And obviously energy. We ship a lot of energy down to the US. So if we were to stop that, stop the uranium for nuclear energy, a lot of the energy that the US needs and gets from us is crucial. A lot of business done between the states that are right beside us, right, that are along the border with Canada. He talked about talking to the governor of Kentucky. I believe they sent alcohol up here. So a lot that we can do, even though, as I mentioned, a position of strength. The U.S. has that position of strength, but I'm sure there's a lot of things we can do. So I am hopeful that some sort of negotiation will happen in the coming days, and that hopefully we can get through all this talk and move on with important matters about growing our country, our province, etc. So hopefully all of you enjoyed the interview. I did. And as I said, the Premier is always gracious with his time, and I thank him once again for being on our show. So this week we actually received an update on inflation here in our country. And of course, this is extremely important. Last read that we had inflation numbers of about 1.9%. We also had core inflation, which strips out volatile food and energy, also come in at around 1.9%. So as I hinted off the top of the show, we received actually slightly better data on the headline number, 1.8% inflation. But core numbers actually ticked higher to about 2.1%. So slightly above, I guess, our November reading. So that's the CPI reading for December. Now, interesting enough, when you talk to economists and those that are analyzing the information, had we not had this GST holiday that we're all experiencing right now, and I guess we'll be experiencing for another few weeks yet, as we all know, government gave us a break on tax over the holiday season, the federal government, that is. If we did not have that lowering of costs due to the tax holiday, our inflation reading was expected to be about 2.3%. So well above what we saw in November, and one of the largest jumps that we've seen in inflation. So with that in mind, the big question is, what does the Bank of Canada do this month? Will they announce another interest rate decrease? I guess coming up in the next week and a half or so? Will they continue to cut rates as aggressively as they did last year? And not so sure, because what obviously is happening to our currency, and with the fact that if you didn't have that GST holiday, HST GST holiday, that our inflation data would actually be above 2%, 2.3%. So be interesting to see what the Bank of Canada says, Tiff Macklem, what he says and what he does. Our first illustration here is a chart we've seen many times. Bank of Canada key interest rate versus the inflation rate. And you can see here that the policy rate is 3.25%. There it is. And you can see now our inflation rate 1.8. But as I said, you can probably look at that as being closer to 2.3% than 1.8%, just due to the GST HST holiday that we are experiencing right now has obviously brought down prices. Our next chart here just shows the path that the Bank of Canada has taken. There it is. And you can see all the different times the bank paused in 2024 and then begun an interest rate decrease or lowering cycle. And you can see starting in June, the cycle began, quarter point cuts, and then we actually had two 50 basis point cuts in October and December to end the year. So about 175 basis points or 1.75% came off interest rates. Question now becomes, how quickly does the Bank of Canada cut rates this year? Again, with our dollar well below 70 cents, actually coming in just above 69 cents just as early as this morning. We saw a bit of a rally in our dollar with some of the announcements, or maybe should I say the non-announcements, or the announcements the president didn't make recently since he's been since his inauguration on Monday. The dollar actually gained a little bit of strength, only to see it pull back again once the President Trump's talking about perhaps putting tariffs on Canada as of February the 1st. So that basically took down our dollar once again. But you could clearly see here what's happening, what the Bank of Canada has done with respect to interest rate cuts, and with the latest inflationary data telling us that inflation is starting to get a little warmer again, as it is in the US. Perhaps the Bank of Canada won't be so quick, or maybe as frequent, or maybe they won't cut as much each meeting as they did in the past. So maybe we do cut, but maybe only 2 or 3 times this year versus 3 or 4, and perhaps we only cut a quarter point going forward. So we'll have to see our next meeting with the Bank of Canada, what they say and what they do. But as I said, inflation seems to be moving a little bit higher going forward. Now the part of the show that I get asked probably the most questions about, and that's the part of the show where we talk about 3 things that individual investors should be focusing on, should be considering before they make their investment decisions. And a little bit different list this time. Key tech earnings out next week. We've seen that, right? Earnings reports. We've already had some of the big banks in the US report, pretty much all the big banks. We'll talk about that a little bit later on the show. But really, most people say bank earnings season doesn't really start until the tech companies report. The Mag 7 or Mag 8, as we now call them, Batman, the Magnificent Seven, the 8 biggest tech companies in the world today in the United States. Until they report, many people believe that we're not sure exactly how the economy is faring. So something to consider there. Policy announcements out of the Trump administration. So I'm not talking about their recent orders that the president has put through, executive orders that he has put through. I'm talking about just announcements, just talk. Just talk out of the Trump administration actually can move markets. And as I said, I think on the last show, last time President Trump was in power, 2016, you quickly realized that you had to follow him on Twitter. His Truth Social Twitter handle had to be something that is frequent on your phone or everywhere else, because sometimes markets move. You really don't know why, and you find out that the president has made a comment about something. So his commentary alone, his announcements alone, definitely can move markets. And number 3, this is an interesting one because it's about making decisions to invest in the markets today. Not making that decision or not investing in the markets because of fear, because of uncertainty, or because maybe you just don't like the new president is probably not something you want to do. I think if you have the money to invest today, you need to be an investor, and we'll talk about that as well. So let's move on to our first point. Key tech earnings out this week, and you can see them there. Key tech earnings out next week. You can see them there. Apple, Tesla, Microsoft, and Meta, formerly Facebook. 4 out of the Mag 7, 4 of the biggest tech companies in the world. There you have, $2 trillion companies in Apple and Microsoft, and Tesla and Meta, well over $1 trillion in market cap. First chart here that talks a bit about the tech sector is the Invesco QQQ. We have it on our broadcast many times. You can see here that really since beginning of December, tech stocks have kind of fallen off a little bit. You had markets making lower highs and steeper lows. So that's not a chart you like. It's kind of moving to the downside. But with the recent announcement, and we'll talk about that shortly as well in our next point, but with the recent announcement out of Washington, talking about building AI infrastructure, teaming up with Oracle and SoftBank and OpenAI, the parent of ChatGPT, building out as many right currently as 10 different data centers and with the hopes of building maybe as much as 20 down the road, putting investment, 100 billion from SoftBank into the United States, really putting emphasis on AI and building out AI and GPUs and infrastructure and data centers. That recent announcement out of Washington yesterday really started to get the ball rolling once again in technology. And we talk about the president talking about getting rid of a lot of the red tape, a lot of CEOs really excited about what can happen under the new administration. Very pro-business, which is good. So we talk about why you have to look at key tech earnings. Well, that's a reason why, because the president is focusing on that and focusing on artificial intelligence. Our next chart here, Microsoft, one of the stocks that it's going to be reporting. And you can see Microsoft has been having a bit of a tough ride since their high points, I guess now back in the summer, July. They really haven't done so well. And many people are actually looking at them as, okay, is it an opportunity to buy? As we know, Microsoft invests in OpenAI and ChatGPT. And so this new, agreement with the government, OpenAI and Oracle, definitely will benefit Microsoft as well. We saw their stock price move significantly higher this morning on the back of that news that was released last night. Meta Platforms, our next chart, formerly Facebook. You can see here, better chart than Microsoft. It's had a bit of ups and downs, but overall, since last summer, it's pretty much gone from the bottom left to the top right, trading just off its all-time highs. And once again, we saw Mr. Zuckerberg, CEO of Meta Platforms, at the inauguration, sitting right behind the president, alongside of Sundar Pichai, CEO of Alphabet or Google. We also saw Tim Cook, CEO of Apple. So you can clearly see how important business is to this current president, and the big cap tech names were right there and supporting the new president. Tesla, as we said, who has supported the new president more than Tesla, right? And Elon Musk. Elon definitely out and about during his president's campaigning for the president. And, we've seen his stock once again go above $1 trillion in market cap. So another one of the biggest companies in the world today. Tesla obviously involved in not just battery-powered cars, but so much more. And Elon Musk leading up the Doge, part of the government in the United States, looking for ways to cut costs and bring down spending. So we'll see what Tesla says next week. And last but definitely not least, which was once the most important, or most large company in the world, the largest company in the world, Apple. They report as well. But since their recent decline, Apple is actually no longer the largest company in the world by market cap. That has now been surpassed by, yes, you guessed it, NVIDIA once again. NVIDIA is just under all-time highs, whereas Apple is probably sitting at about, I would say $35 to $40 off its all-time highs. It's been having a bit of a downturn, as you can see here on the chart. Many are saying that their sales out of China are definitely a lot softer than expected. So Apple stock, an Apple chart there, but Apple reporting earnings, and as you can see, it will be a crucial one for the company. Our last chart here, talking about key tech earnings. Well, why do we focus on key tech earnings? Well, this pie chart here will clearly show why. Infotech, communication services, tech in general make up between 40 to 50% of the S&P 500. And again, that's why people will say, investors will say, well, earnings season off to a good start with the banks, but until we hear what the big cap tech names are saying, we're not going to, give the thumbs up yet or the approval yet for earnings season. We want to hear what these big cap tech names have to say. And if they report good earnings, then yes, at that point, I think we can give the seal of approval on this earnings season. So we're still early in earnings season. We got a lot of tech earnings to come through next week. Still have a number of other companies, pharmaceutical, retail, etc. But as you can see, very important to keep an eye on tech earnings that will kick off. We actually saw kickoff to tech, if you want to call it that, with Netflix last night. Blowout numbers, 18 million new subscribers, fantastic numbers. So maybe you can say Netflix kicked off the earnings season for tech, but the big caps will report next week. Our second point that I wanted to touch on, as I said, are policy announcements. And these are announcements by, I love that picture, announcements that are coming out of the Trump administration. And as I said last night, there's a perfect example of an announcement. They call it Stargate, I believe. And this will be the project that Oracle is involved in, OpenAI is involved in, and others, many others will be involved in to just further the AI dominance that the United States has over the rest of the world, building out data centers, building out infrastructure. And SoftBank, a Japanese business lender, will lend as much as or invest as much as $100 billion to start in the US and perhaps increase that to as much as $500 billion. So just on that announcement alone, Oracle was up today 6%. You have all the chip makers, NVIDIA and many other chip makers up $4 or $5 a share. It's just been unbelievable. And as we know, whenever you have President make as I said, off the top of the show, a comment via Twitter or have a press conference, it's market moving, right? And sometimes what he doesn't say is also market moving. And he has the White House, he has the Senate, he has the House of Representatives, and right now he has the approval rating. And our next chart here shows what his approval rating is right now. You can see here it's starting at, looks like, what is it, 47% approval rating. You can see President Biden in blue, he started with a very high approval rating in the high 50% range, and by the end of his 4 years, he was below 40%. Whereas the President Trump, when in his first term, he also came down in approval rating, but it was a bit choppy. And keep in mind, he also had COVID hit the United States during his first term, so that didn't help either. When you're tracking President Trump and what he says and his promises, our next chart, a little bit of a small chart here, will show what he's already spoken about. There it is. So immigration, taxes, he hasn't really spoken about as yet. Energy, so far he's kept his promise, declared a state of emergency with respect to energy so that they can drill, baby, drill, as he puts it. Education, he hasn't really done a whole lot as yet. And he has other things. And if you, I guess there we have, so immigration, we have status currently in progress. We have some things that are, as we call it, complicated. He has fired a number of, as he calls, corrupt bureaucrats. He has kept his promise to pardon a lot of convicted individuals from the January 6th assault on the Capitol. And he's done all these things with his executive orders. And the one that I guess hasn't been, which is the last one on our list, which is imposed 25% tariff on Mexico, Canada, and 10% on China. And as you can see here, it says complicated. What we've heard so far is he's doing an investigation. He has people looking at what is going on between trade between Mexico, Canada, and the U.S. And the USMCA could be changed, and that's what many people believe is going to happen. Our next chart here, talking about currency. You can see just in this currency chart alone how much of an effect just the president talking about something has. So just mentioning tariffs are going to happen. Dollar's been going down. And then the day of his inauguration, he didn't mention tariffs on Canada. And we saw the dollar shoot significantly higher, went up to almost 70 cents. US dollar fell versus the Canadian dollar, something we haven't seen in a while. And then lately, when he's talked about perhaps putting tariffs as of February 1st, our dollar is starting to come down again. So you can see how much the currency markets are being affected, how much the stock market may be affected with his talk and announcements. Our last point is for our top three with respect to your investment decisions, staying in the market. And our first chart is a chart on Oracle. I touched on it briefly. But this is why you need to stay in the market. And you can see a chart on Oracle, and you'll see all the way to the right, you'll see a shooting up of the stock, much higher, up 4.5% when this chart was taken. But you can see why it's important to stay in this market. We know that from the president's former or previous term that the stock market rises. We have the S&P 500 that shows us that. You can put that chart up. You can see how much the stock market went up during his presidency, his last presidency. It fell at the end during COVID, of course, but markets move higher. And I think for those that are nervous about the uncertainty, I understand. For those that are concerned about the tariffs, or people that just may not like the new president and the way he goes about his business. And if you're not in the market because of that, I just think that's a mistake. We've seen the markets continue to move higher. If you're going to be an investor that is not going to invest just because of emotion, because you may not like him, because you're fearful, I just don't think that is the right approach to take. Market's higher today. Market was a lot higher yesterday. Market has been higher since he was elected as president. Market went higher when he was president from the 2016 to 2020 time period. Markets move higher. And the reason for that is president takes on a very pro-business stance. And I think everybody likes that. It is refreshing. CEOs like that. He creates an environment where individual businesses can do business. Removes red tape. Perhaps he's going to cut taxes at some point. All this is favorable to business, favorable to the stock market. And so if you're someone that is not in the stock market because of that, because of emotion, or because you may not like what he says, or you're nervous, I just think that's wrong. And in my opinion, I just think everyone needs to take it as it comes. Be in the market, invest in good quality companies, look for value, and then take what happens as it comes. And to me, I think that is the best approach. As I mentioned earlier, bank earnings out of the US start off the earnings season. JP Morgan, Citibank, Bank of America, Wells Fargo, Goldman Sachs, Morgan Stanley, all these banks reported really, really good numbers. Wells Fargo was probably the only bank that didn't beat on the bottom and top line, but they showed significant growth. And where was the growth? In the areas like investment banking, wealth management, trading, both equity trading and fixed income trading, net interest margins. Overall, the economy has been good in the US. US economy is growing by 2.5%, 3%, and that is playing out in the earnings of the big banks. And for those that held bank stocks in Canada and US for the last few years, you've known that bank stocks, really, with the exception of only a few, Royal Bank here in Canada, JP Morgan in the US, which happens to be the two biggest banks, right? Biggest bank in Canada, biggest bank in the US. But other than those banks, it's been a tough ride for banks with interest rates as high as they are, activity at the bank, lending from the bank, trading at the bank, everything, bank environment wasn't that great. So now we've seen a lowering of interest rates to stimulate the economy on both sides of the border. And now bank earnings are really taking off once again. And our first chart here is one you can see clearly. JP Morgan, as I mentioned, the biggest bank in North America, one of the biggest banks in the world. Phenomenal chart, phenomenal stock. Firing on all cylinders. Our next bank here, Bank of America. Again, another fantastic chart. Look at that chart. Imagine you bought Bank of America stock sometime at the beginning of August, sitting somewhere just under $37 today, or around $47, a $10 gain. Huge gains on that stock. Wells Fargo, another strong bank, one of the largest banks in the United States. Chart had a run up to about December, pulled back a little bit, but now is surging ahead once again. And Citigroup, our last individual bank chart. Finally, I can't tell you how many times investors said to me, when is Citigroup going to move higher? Well, here it is. Finally, we're seeing Citigroup move higher again as of August, all the way to present day. It's been a fantastic ride. And I guess our last chart here is just the bank index on its own. iShares US Financials ETF. Again, we saw a bit of a pullback in December, early January, but things have really moved higher in the last week or so. in anticipation of the new president taking office, deregulating. The banks are saying the environment is great for business, and they're all open for business, of course. So I don't, anticipate things to slow down at the banks. I anticipate bank earnings to be good in the U.S., continue, and I hope that, and I believe that will spill over into our banks here in Canada. Quick hits, part of the show where I talk about three things very briefly that probably seen in the news, three things that I want to, I guess, just comment briefly on. And here we have all three. First one, Canadian firms are seeing better sales. Yes, if you can believe it. Sales are going up here in Canada from retailers. Consumer spending, again, a little bit more. But businesses are upset about U.S. measures. And that's what the Bank of Canada, central bank here, has said in a survey. They're upset because they're fearful that we're going to see some tariffs. Second thing that we've seen in the news recently, Trump bets on executive orders. Well, we've seen it in the news, right? How many executive orders did he sign just in the first 2 days that he was in office? Someone said just this morning to me, like 200 or something. I thought the number was a little bit lower. I think in the first few hours, he signed into, I think, 46 or 50 executive orders, different ones. We saw some of them on a previous illustration earlier on the show. TikTok off and then on again in the US. And for now, I guess it's on based on this idea that the president will figure out something to keep TikTok turned on in the US. So let's touch on our first one. Canadians are seeing better sales right now, but they're obviously fearful of tariffs. Let's go to our first illustration, and you can see the business sentiment has remained sort of subdued in 2024. You can see here, these are the percentage of firms reporting positive sentiment. And you can see that it is way down from 2022. Positive sentiment was around 60%. Now it's under 20%. And with obviously looming tariffs on Canadian goods being shipped to the US, that hasn't helped much. Our next chart here talks about business outlook survey. What does that tell us? Well, it tells us things are getting better, but still nowhere near where we want to see it. Still below average. And a bit of a complicated chart there, but if you follow the black line, you can see that the business indicator, the business outlook survey indicator, has definitely fallen from 2021 to 2024, started to tick higher. As we start lowering interest rates, or the Bank of Canada started to lower interest rates, that indicator started to move up, but still not nearly where we want to see it. The next chart here, these are firms that see higher risks ahead. And I know it's tough to see some of the wording here, but many businesses are saying that they see higher input costs. That's the middle bar in there, the third one from the left. You can see input costs, they expect to be higher, selling prices higher, domestic sales, they're seeing not bad, but most are still seeing a struggle there. Exports, also a bit of a struggle, which is third from the right. And I guess financing costs definitely sort of flatlining. You can see by the dots where things stand, and the dots represent the balance of the opinion. So these are businesses, their opinions. So they believe costs are going to rise in general. They believe that financing costs will sort of stay flat because interest rates are coming down. But domestic sales might start to slow, and selling prices and input costs will rise. And again, selling prices will rise because input costs are rising as well. Our next chart shows here that firms expect sales growth to improve from last year's low levels. Here you have it. Just if you look at the red line there, you can see that, there's the expectation of growth from off the low levels. But again, how will tariffs affect that? And so that's something that nobody knows. And we may not know, maybe until February 1st or sometime after, how tariffs will affect our sales and our growth in our country. The next point, Trump bets on executive orders. Our chart here that I wanted to show is one on oil. And one of the executive orders that he signed I guess right off the bat, was to make energy state of emergency so that he has the power to drill more. And you can see that price of oil got up to almost $80 a barrel, has started to tick down with the United States talking about drilling a lot more. I've heard some people talk about oil perhaps falling to as low as 60, maybe even below $60 a barrel WTI as the U.S. ramps up production. And some people believe that they probably can't increase production that much more because they're already producing over 14 million barrels a day. So there's a lot of talk back and forth. But recently, the president signed an executive order to call energy a state of emergency. But as I said earlier, signed a number of executive orders, which are, as you can imagine, being challenged in the courts right now by various governing bodies, by various institutions and individuals. So we'll see how everything pans out. But executive orders is what President Trump has signed over the last couple of days. Our third point and final quick hit is the one on TikTok. And probably for many of the children, the adults in the US, they realize that TikTok was turned off for a brief moment in the US, but turned back on once the president made mention that he's going to, again, through his executive orders, do an analysis on TikTok, suspend any ruling for about 75 days. Apparently, he has the ability to do that, I guess. And so TikTok is right now still available in the US. So there's our little picture here. Welcome back, it said on TikTok. Thanks for your patience and support. As a result of President Trump's efforts, TikTok is back in the US. You can continue to create, share, and discover all the things you love on TikTok. So we'll have to see where TikTok goes. And we'll see, in the coming, I guess, 75 days or so, we'll see if there is a suitable buyer. We'll see if the Chinese agree to let go of TikTok. And in some capacity, maybe a 50% buyer. We know already that the data is kept on Oracle servers in the United States. So that is not an issue, but we'll have to see how it all works out. So those are three quick hits that I think have been in the news, and hopefully some commentary on each has shed some light and some information on them further. So once again, our show, a great show we had today, and our interview with the Premier was fantastic and put us a little longer of a show. So I have time for one quick question today. And let's see here. Okay, on Monday, President Trump indicated he would place 25% tariffs on on Canadian imports starting on February 1st, perhaps. Do you recommend that Canadian investors make any adjustments to their portfolio based on this announcement? Great question, and obviously fits with our show today. So the quick answer is no, I don't. And we're going to have to see how this all pans out. Sometimes you prepare for the worst and just the worst doesn't happen. I think certain segments of the economy will be affected by some sort of tariff that will be implemented at some point, but not all parts of the economy. When you look at technology, for example, will NVIDIA be affected? Will Microsoft be affected? Will Amazon or Meta be affected? I'm not sure. Big cap tech may not be affected, and that's what's driving these markets. So if you start to make changes in the portfolio based on fear, I just don't think that's a good recipe for success. So as an investor, as an investment advisor, I recommend anybody who's watching today, let's see what happens. Let's take it as it comes. Let's continue to make good investments, buy good quality ideas at good value. And as always, if they pay you a dividend while you wait for the growth, that's a fantastic recipe for success. So with that, I want to say thank you to everybody that watched our show today. It's been fantastic. I want to say thank you again to Premier Ford for coming on our show and shedding some light into this, I guess, issue or topic of tariffs. I know it's been on the minds of many of us. Once again, thanks to everybody for tuning in. And basically, I want to say to everybody, to tune in to our next show, because on our next show, we have another fabulous guest. Jeff Rubin will be on our show. He is a best-selling author. He's an expert in energy and trade, and he was former chief economist for the CIBC Bank. And we'll have him on our show on Wednesday, February the 5th at 12 noon. So same time, same place as always. And he's going to talk to us about what he sees in the economy going forward and what the expectation is for investments in the year ahead. Promises to be another great show. But until then, happy investing.